Hi, I'm Tom Elliott with another market report from here at 3AW for Hodges Real Estate. Well, the stock market has been having a very interesting time recently. During September, it fell quite precipitously, and usually October is a very bad month, and yet in the first week of October, the market has rallied over 10%, with some stocks, such as the banking stocks, going up more than 15%. The reason for this, of course, is what's happening in Europe. Now, what is strange is that since the global financial crisis, many people have been focused on what's happening in the United States. And indeed, the US economy is certainly not out of the woods. However, it now seems quite likely that America will avoid a second recession, which could have turned into a global financial crisis Mark II. Yet surprisingly, of course, all the concerns of the world are focused on Europe. Now, as we speak, negotiations are going on over in Europe to try and cobble together a big bailout package, essentially a huge pile of money to stop countries like Greece sliding into default. The amount involved will be in the hundreds of billions of euros. Some people say it could be up in the trillions if indeed there are defaults. No one quite knows. Whether Europe can pull itself out of these problems is still very much up in the air. I have the feeling that they will. Some commentators have suggested that the Eurozone could fall apart, and indeed the European common currency, that is the euro, could also fall apart. I don't think this will happen, and the reason is simple. For the smaller countries, the euro is actually quite good. They like it and their people like it. Were they to re-adopt their old currencies, for example, if Greece took on the drachma, it would become instantly bankrupt because its debts would be denominated in euros, and of course the drachma wouldn't be worth anything. The other risk in some people's minds is that the wealthier countries in Europe, Germany for example, might themselves decide to leave the eurozone. Again, I don't think this will happen. Even though Germany could relaunch the Deutschmark, its old currency, and that would prove to be very popular on the world stage, Germany does very well having a weak euro as its currency. One of the reasons the German industry is going so well is precisely because they're very competitive in an export sense. So overall, I think the Europeans are going to cobble together some sort of solution. So what does that mean for us here in Australia, and in particular for property investors? Well, clearly if we avoid a global financial crisis Mark II, that would be a good thing. Anybody who remembers what the dark days of 2008 and 2009 were like would know that we do not want to repeat that experience. Secondly, however, is of course the impact on the Australian dollar. Now, the Australian dollar has been up and down like a yo-yo recently. Although it has retested parity again in the last few days, my sense is that the A-dollar will probably soon start to trend down. And I don't like normally making forecasts about currencies, but I will in this case. The reason is primarily because of what the Reserve Bank said at its last meeting. Now, the Reserve Bank has kept interest rates on hold at 4.75% for quite a long time. I think it's almost a record in terms of keeping interest rates unchanged, well over a year now. What has changed, however, is the Reserve Bank's language after its last meeting early this month. Now, the Reserve Bank has said that its inflation expectations for 2012 and 2013 have moderated. Previously, the RBA kept saying how it expected inflation to go up. Now it's saying inflation will probably stay within the 2 to 3% band range that the Reserve Bank is comfortable with. This to me says that the RBA will soon start cutting rates. I know I've said it before. I know it does sound like a broken record, but there's an old saying that, well, if you say something often enough, eventually it will come true. There are a couple more Reserve Bank meetings this year in early November, early December. I reckon we'll see a 25 basis point cut in one of those two meetings. Clearly it's more likely to happen in December than November. And then I think in early 2012 we'll see another cut. So official interest rates, in my view, in the next few months fall from 4.75% down 0.5% to 4.25%. The big banks, who are awash with cash right now and are very keen for people to borrow, will pass on those cuts, and indeed you can already see that fixed rates are getting cheaper on the Australian interest rate markets. Now, there's one other big issue that people have to consider right now, and that is today the carbon tax has passed through the lower house of the Australian Parliament, and over the next week or so it will pass through the upper house, which is of course dominated by the Greens. So the carbon tax turns from being something that people talk about, write about, pontificate about, speculate about, into something that will now become part of the law of Australia. Interestingly, Tony Abbott has already come out and said that if he wins power at the next election, which is due in 2013, he said he has signed in blood that he will get rid of the tax. So who knows, maybe the carbon tax will only be with us for a year or two before a resurgent coalition decides to get rid of it. But for the time being, it's real. Now, again, this will increase uncertainty in the economy, which just reinforces my view that the Reserve Bank will have no choice but to cut rates. In the long term, or the medium to long term, the next 3 to 5 years, which is the sort of time cycle that property investors should always look at, what will the carbon tax mean? Well, assuming it stays in place, and again, we've got to think about what might happen in the world of politics, but assuming it stays in place, I think that the expansion of our outer suburbs is probably going to draw to a halt. It will no longer be economically viable for people to live a long, long way from the centre of town. As a result, anybody who invests in real estate knows this, the inner and middle suburban areas, for residential at least, they will be the areas in which people want to and should invest. When it comes to commercial property, of course, it's the same sort of thing. The closer in, the better. I think the carbon tax is going to stay with us here in Australia, notwithstanding what the opposition says. And I think as property investors with a medium to longer term time frame, we have to get used to it. That's my market report for Hodges Real Estate. Look forward to your company again next month.